Hello everyone. Before we start with the video, I want to say a couple of things. I am not a financial planner nor a financial advisor. I'm not FCA approved. I'm not approved by any institution that allows me to give financial advices. Nothing mentioned in the video should be considered as an investment advice nor guidance. Everything showed, talked, and explained is for pure and only educational purposes. The risk is in your own hands, and I always recommend trading on them accounts as that's literally the only way to not lose money in this market. Enjoy the video. Hello guys, good evening. I wanted to do somewhat of a video about thought process, or basically how am I watching the charts while we are on a live market. Of course, I'm moving through the day, so I can't really do a video of me basically just analyzing the market live, as I'm basically on my computer for a few minutes and then I'm not anymore and stuff like that. So basically I started to do a video on price action of July 8th. Didn't want to do it on today's price action as I do remember some of the movements, and basically that'll probably affect me indirectly and basically make me subconsciously think on the direction of today, or basically on the moves that happened today. I do kind of remember a little bit of this as I did talk about it on the video and stuff like that, but yeah, you know what I mean. So, thought process. Basically what I wanted to show or talk about this about on this video is a little bit improvised, but basically just show you how do I look for the things that I try to find, and I think it's as simple as that, right? So let's say I wake up at 6 a.m. It's July 8th. I have this price action. I see that we had a move down. We have been, since this break right here, we have been pushing higher. So at this point we have a flip. So we're looking for buys. S to the flip, yeah. Then we have a break. So basically the flip mitigated on the extreme of that. The break later mitigates on the barely mitigates this, but it does mitigate that. So we have that. I could call this a major break. We are going to identify the liquidity that we can see, which is this one top. We do see something, well actually it's not that clean, but I do kind of like it. Somewhat of a ascending couple of lows. Then we have this other area which looks pretty clean, right? Okay, so that's the liquidity that we have. When I have a push like this, as an example, after this break, we could have looked for a buying opportunity, but we don't really have much to go for, right? And when I say we don't have much, we actually have too much, right? Because here we have this area, have another one here, and another one here, right? So that's basically. Sorry about that. I had to make a small pause. So what I was saying is that since we have so many areas, we have to do a little bit of a further analysis and basically think what of this is basically usable. And based on my experience, actually, sometimes the extreme area will work nicely. Sometimes nothing will work. So basically you could think that we have this liquidity. We have this liquidity. So basically this extreme area could take all of that liquidity. Price reacts here and basically works like that, right? You could also think, but yeah, actually, let's stand by this. So we basically could consider this whole thing as liquidity, expecting price to basically go lower to this area, right? And basically take all of the liquidity. So what I'm trying to say here is that when I have a movement like this, I just decide to not try to trade this, as it is a little bit of a complicated or complex structure that I'm not really interested into risking my money on, right? So we can easily find an opportunity inside of this range, not range, but inside of this corrective move. But basically what I do see most of this, that all of this is just liquidity, right? So I do expect it to either do like this, mitigate the extreme area, and then go higher. this will be my trade. If I wanted to trade somewhat of a buy from something inside of this last move, I would go for this. It comes from mitigation, it has liquidity within it, it has liquidity above it. There's a lot of liquidity towards that area. It took liquidity, if we consider that pretty good liquidity, and it comes from mitigation, mitigation, and third mitigation, right? So a lot of mitigations. Now, that's basing ourselves just on the structure that is within the last couple of minutes, well, the last couple of hours, which is this. But you also do have to consider where price does come from, right? So price, we have somewhat of equal highs here, now that I see them. You had this type of structure, which I made an example with this same structure. And basically you have two options here, right? You can use the concept that price has to take that liquidity sooner or later, right? Do something like that, take the liquidity and then fall. Or you can think of it like this, that basically price corrects and then basically pushes lower, sorry. So at this point, I am not interested in trading. I prefer to see some cleaner structure. As an example, clean structure for me is this flip that we have here. This structure is not tradable for me. It never really broke. We could have tried to get a sell there as this took liquidity and we had lower liquidity or something like that. But basically, this major break that we have here, this would have been tradable as an example. If price actually acted as liquidity and price actually came lower to mitigate that, that could have been a trade for me, right? But I want something clear. I want something cleaner. I basically want just something that basically is not that messy or anything like that. So we have this structure, this high, sorry. Not something that I would trade just like that, but I would like to trade it in case we do have somewhat of a confirmation, right? Although we do have to keep in mind that basically price could easily just go higher, take that liquidity that we have up there, taking us in a stop loss, and then continue aiding to go lower, right? So right now, no trades, no trades, no buys, no sells. I do like the fact that it created this literally the same liquidity. I don't know why. So if I was thinking on this extreme, this could have been a little bit more of not a confirmation per se, but a little bit more of an, well, it would have motivated me to take this trade a little bit more further, right? This candle, this last buy to that sell, this last sell to that buy that caused the break, basically, as I said, it can easily work out, right? But this is not a trade that I would usually take, so I'm not going to count that. And well, it works for a little bit, but as you can see, it later fails. So right here we have a flip, right? So what you have to do while price does its thing, you're just a viewer. You're just looking at what price does. And of course, you make these draws. Sometimes I don't draw. I don't draw the areas. I don't draw the flips. I don't draw the breaks because, well, it's when I come back, I do realize, okay, so we had a flip here. This was a break of substructure. We had liquidity. We have liquidity here. Have liquidity here. Played pretty clinical highs. We could even consider, actually not, but yeah. So we are kind of reacting to this, as you can see right here. And you could think that that's actually a pretty good move. And after this move, we could have tried to get into this sell, which is kind of working right now. But at the same time, I've seen that, let's say we have this type of structure where price is just pushing lower and lower and lower. And then we have something like this. And price then starts to push higher. Hold on, that's not what I wanted to do. Let's use it like this, okay. Has something like this, and then price does this, right? No, still not what I want to do. Okay, so basically what I'm trying to say or talk about, when we have an area here, another one, another one, and we could have been called that an area on that time, at that point, of course. But basically, when we have all of these areas and price is actually going higher and higher, what I expect is price to actually go to the higher or to the most extreme one, right? Talking about long areas, extreme areas, like right when we have a big structure, a large structure, right? When we have something, of course, when we are here, then we could consider the decisional as an entry place, right? Like when we are within this move, I don't expect that the price has to go higher, to that extreme, but it could easily go to just the decisional candle and then continue to fall, as it did on this one. Well, that one actually reacted to 50% of the whole range, which is another type of entry, but not something that I really like to trade. But that's what I'm basically trying to say, right? When you have an area that is close to the extreme and price actually reacts to that one, for me, it's more like it creates more liquidity towards the extreme area than the fact that it could be easily reacting to this, right? I'm not 100%, how do you call this? Not 100%, this is not a 100% thing, but this is something that I've seen in the past, and that's how I trade those type of movements, right? So, yeah. As you can see, we basically flip again. At this point, this is our flip right here. That's our flip. And actually, if you look further, liquidity. Okay, so what happens? I don't remember at what time did I get up this day. It was probably Monday, wasn't it? No, it was a Tuesday, I think. I don't know if I just didn't want to take this trade or what was it, but the thing is that look at the liquidity. We first created liquidity here, right? Didn't draw it because it didn't seem necessary at the point. Now we create even more liquidity, and look at the reaction. This is manipulation. You have to think about liquidity as manipulation, right? That's all you can really do. And what you have to think about is, okay, so there's support, resistance in this case, here. Now we're creating even more resistance, so this whole area is basically somewhat of a strong area. And what happens when price gets back into this area? Price immediately falls like that. So what happens at that point? Retail traders basically just decide to place their entry here. So the market execute that as soon as that candle closes, or maybe even here when they see rejection. And their stop loss is just above this liquidity. That's what makes these areas liquidity, right? The fact that people are leaving their stop losses just above those areas, right? So that's liquidity. That's liquidity right there. That's manipulation. Banks and institutions, of course, you gotta think that this is not a person doing this. It's an algorithm. It's not a guy saying, okay, so let's wait for price to get here. Let's buy until here, and then we will sell just a little bit so price starts to reject, and then we sell a lot, but then we buy to take them out. That's not a guy doing that. That's an algorithm, and the algorithm is programmed to do this, to manipulate people, to create liquidity, for people to do this, to basically take an order here, their stop loss just above that area, and then when I don't know if it calculates the liquidity that there is or something like that, but basically then it takes that liquidity to then fall lower, right? So at this point, that kind of manipulation and the fact that we have this here, which is of course not very correlative as it is a little bit lower, but the whole area basically looks like an area of support, area of resistance, that says a lot, right? So at this point, you could start thinking about taking a trade here. To be honest, as I said, I do not know if I just didn't see this. If I remember correctly, I woke up to something like this, or I don't know. To be honest, I just don't remember. I actually do have the price action to this day, don't I? Yeah. Okay, yeah, so I woke up to the flip and the break. So I was somewhere around here. Yeah, okay, 7-11. So I do remember we had that trade there. Yeah, never mind. I don't remember now. So I missed out on this movement. I don't know if at this time I would have traded this, but basically seeing all of this liquidity does really give me that that mindset that we might see a move towards the downside after tapping somewhat of an area, right? So maybe not the full risk. I risk only a 0.25%, so that's not a lot anyways, but I probably would have gone for less risk. But basically, all of this liquidity does give you a pretty good heads up of what's about to happen, or what could happen. Of course, we never know for sure, right? I'm not saying that this will definitely work 100% of the times, right? So basically, what do I expect right now for price to take that liquidity? Maybe not right now, maybe as we did flip. As you can see, we did flip here, so price could come back down, mitigate this area or the lower one, and then continue to push higher and take that liquidity. Or it could just from there go there, take the liquidity, mitigate the area, and then continue to go lower. But we'll see what happens. Don't really remember exactly what happened. Juggles around a little bit, and as you can see, it does mitigate that pretty strongly. It does go a little bit higher than the 50%, sorry, and then it begins to fall. Right, so let's say I'm inside of this trade. When I'm inside of this trade, all that I'm seeing is what are we doing? What are we doing? What's going on? Do we have to be careful? Is price reacting to an area that looks like an important area? Basically, just want to make sure that I'm not going to get an impulsive move just like this one, but against me, right? So I make sure it's simple right now. An area of risk is this. That's what we have right here. The extreme area, of course, makes a little bit more sense in this case, as it supposedly took liquidity, we could say. But yeah, I do like the fact that we are reacting to this major area and that we have this overall major look. So right now, I don't think I should be scared of anything, right? And even my target could easily go just below these lows, as when I have this type of structure, I at least expect that low to be broken, right? And we could even look at it like this, where you expect the same movement to happen. So that's our entry. Sorry, you gotta see it from where it begins, where the move begins, and the low of the arrow is right there. So basically, as you can see, just below that low, right? So that's what you basically expect. And well, in this case, that's what happened. But let's just go on with the usual type of trade, right? What do I see? We're pushing higher, right? We have now a D2S flip, demand to supply flip, and we're basically pushing lower, right? I do see this retracement as something, of course, I don't like when price starts to go against me, but what do I see? I see a flip. And what happens if I'm trying to sell right now? I see a flip, then I wait for the break. So right now, what could happen is price mitigates the extreme area. Let me delete this. Price mitigates the extreme area, falls to break, and then we could try and trade something here or on the extreme, right? So at this point, I don't want to move my stop loss, because if I move my stop loss to break even right here, price could easily take that, tap that extreme area, tag me out on break even, and the price would just continue on its direction, right? So at this point, I basically just wait. I wait, price could go against me, making me take a loss when we were already at somewhere around a 0.75% profit. But basically, it is what it is. That's how I know, sorry, not how I know, but how I've seen the markets move. So that's all that I wait for, right? Okay, so at that point, we are out in a take profit. What do we wait for next? We had a break, we had a flip. When we have an impulsive movement, we know what to do. We either wait for new patterns to form, or we wait for price to, as an example, tap a pause or somewhat of a range within this whole push, and we wait for somewhat of a confirmation entry there, and we take that loss. That sell. So yeah, let's see what price does. It did kind of react to that, so that's good. This is the trade. I do remember this trade very lively. I don't know what's the expression, but I do remember this trade as it was yesterday. So this type of pattern, something that I've actually seen a lot, and it's not a type of patterns. I mean, it is a pattern, but it's not a type of setup that I got on my setup thingy, But the thing is that we cause a break, and within that structure we have a substructure break, right? So we have a swing low, we have a swing high, a swing low, swing high. That swing low is broken, and basically the entry is this, and that's what worked out in this case. And that pattern has actually happened a lot of times. I don't include it on my setup type of trading as I don't really see it necessary, as it's just that, it's not that you have to wait for a couple of steps, but you just see that and there it is. So, such a big impulse. Let's say we did get into this. I want to say I did. I got up at 7:10, so just a few minutes before that candle closed, before that trade developed, sorry. So I don't really think I would have caught that. Sorry, I didn't caught that, but it's just something like that. As soon as I wake up, of course, I do analyze the market, but it takes a little bit more time than just the 3-4 minutes before the trade was basically triggered here. If it would have given me maybe 5 more minutes, I would have been able to. And I even do remember that I had the chance to actually market execute this, but I just didn't feel comfortable doing that, so basically I decided not to. So now from this week, I do remember that we started using higher time frames, or I did at least draw this area. So what do we know? We are tapping into a 1 hour area. What happens now? When I traded higher time with higher time frame structure back a few months ago, it wasn't that far ago, I always, not always, but most of the times what usually happens is it does some kind of structure like this where it does tap the area, it does give you confirmation to take trades, and it works out for a little bit. It gets out of the area, it does its thing, and then price just breaks that low, and then you get another confirmation to take that trade, right? That's what I do remember happened a lot, and I would actually usually get on this first move, right? So let's say we had something like this, and I would get into this, right? And at this point, when I traded like this, I would go for the higher area, which would have been this one, which would have been somewhere around, if we had such a low stop loss, that probably would have been somewhat of a 100R or 80R, I don't know. But basically, when we got into this area, I was just waiting for something clear. If I had enough to take a sell, if I had enough to take a sell, I would take a sell, and if I had enough to take a buy, then I would take a buy. Okay, so basically, this is the structure that I encounter. Pretty messy structure. When you have structure that doesn't look good, you just mark the areas that are important, right? So this is a break, this is a break, and if this low was broken, then that means that this is the new low, right? Then we have the simple, so that means that we have a flip. That flip does go a little bit further, but then we break down again, flipping when we break that low that broke the high that caused the flip, right? Okay, so that's all that you can see. So right now we are still looking for a lower break of structure, right? That's all that we wait for. At this point, I don't want to trade. There's nothing clean to actually go for. If I do get somewhat of a, let's say we have this. This is what it would go for, right? But I can't really just sell that out of nowhere, right? So yeah, let's see what actually happens. Let me delete this though. So you can see it does go higher, kind of working. So look at this confirmation type of setup again. That's actually something that has worked out a lot lately. I think this is the one that actually didn't hold that much, yeah. But yeah, it's just crazy. When it starts to break such important areas, it does give you somewhat of a feeling that it might be good enough to actually start taking buys. But at this point, I think I did try to take a buy here. Did I take a loss here? We have liquidity. Oh yeah, I do remember. Okay, so let's go back a little bit. Something that used to happen to me and can easily happen to me now is this, right? So we have good reasons to take a buy, right? And if we even go further, we create even more reasons. But you have to see something. Remember what I said just a second ago with this structure, that you have to pay attention to details even if the structure is weird or is bad looking. if you have the privilege to have the premium version of this, it'll be easier, but I'll do it with the 1 minute because it's still pretty good. So what do we see? We have this area that broke demand, supply, sorry, and basically it's a pretty good important area. We could even think that it took somewhat of liquidity, as we did for somewhat of resistance right there, support, sorry, for a little, and then we broke this low right here, right? So we have a couple of confluences towards this area. Then we start creating liquidity, right? We start creating liquidity. But at the same time, when you're analyzing a trade, you can't stop looking at the other side of the market, okay? That's rule number, I don't know, 35, let's call it, okay? So here you have a break. What does that imply? When you have a break, you have created a new high and you have confirmed a new low, right? So at this point, our new higher low, higher low is this one. And our higher high, if we're just on this candle, which is the candle that causes the break, then our new high is just this. Then if we continue to go further, of course, the high goes basically with the high. It's as simple as that. In this case, well, it just goes to that. So that's our new high. And then we start to basically fall. What happens next? This is very minimum, but this is a flip. For me, just that bit of a small wick can be considered a wick if it happens on the right place. If you check where it happened, it's not a big area, not something that you would call amazing per se, but it does look kind of good, right? It's a good area that basically, as an example, had these two equal highs right here, this main top. Let's actually look at that. Those two equal highs. And well, yeah, this highs liquidity, etc. We could even say that it comes from mitigating this pause, and that pause caused this major break. So we could even call that continuation type of setup, right? So we have a flip, right? We are looking for this buy because we have liquidity, but we are aware of the fact that we can easily get an opportunity to sell. When I was on this scenario, I do remember saying a couple of screenshots and a couple of messages through Telegram saying that I was thinking about taking a buy and I was thinking about taking a sell. And that sometimes, that has happened to me sometimes, where you had more than enough confluences to take a buy and more than enough confluences to take a sell. And when that happens, let's say sometimes you have this type of structure, right, which is pretty similar to this. Let's say you're pushing higher and you have this range, you have major structure here, that range breaks this major structure, and then you have something like this, and yeah, let's call it that. We have a flip, we got a break. This is our sell, right? This is where we're getting. Mitigates our sell, target is 5R. Maybe it's below this area. I can't really say for sure. But basically, potential buy is here. Let's say we had somewhat of liquidity before if it lifted off. Yeah. So we have liquidity. What happens in this area? We have this as our target. At this point, I either have the opportunity to close the sell right here and secure my profits, to take partials, which is something that I don't really like doing when we have such small targets as 5R, or to take the buy, keep the sell, and see what happens, right? Because what could easily happen? The buy works out, comes up, mitigates that extreme area, that area that basically comes from mitigation, so it will be somewhat of a continuation type of setup, and then price continues to sell. Right? So your buy could target that high or the 5R, and your sell could target this 5R. And basically you have two trades that close when the other is basically active, and you could even go for this second sell, right? What I usually do in this type of scenario is when you have two areas, I actually go for both, right? I keep the sell open, and sometimes the buy will go like this, or sometimes it just does something like this and then falls, right? Hitting my target and hitting my stop loss at the same time. So that basically allows me to continue to have that profit, but at the same time not missing out on a potential pretty good opportunity that has more than enough confluences, right? So this is the best case scenario, right? Because you have more than enough space for price to actually hit that target. Because if you, on this example, if you have this entry, the loss is just right here. Sorry, the stop loss is just right here. And let's say we went for 15 and 75 of target. Our target, well, it is actually a little bit lower than that. But let's say this is our 5R, right? Our 5R is within the range before that buy. So that's actually really good. That's actually really good because you don't have to over risk it by taking another trade just because you have another area. Or, and sorry, you don't have to basically risk the profits that you're having, right? So that's why I say this is the best case scenario. The worst case scenario is when both the sells, which you'll see in just a second, that's our break. That right there is our break. So this right here is our buy, which if we go to the 15-second time frame, we could even think that this high took, well, actually it doesn't have that much liquidity, unless we do consider this with this high as liquidity, right? Because if we go to the 1 minute, I do actually see somewhat of equal highs, but yeah, it's not that clean. So basically we now have that break. And yeah, as you can see, if we take this sell, let's say we take it on the open, and the stop loss is going to be 30. When I say 30 or 150, I'm talking about ticks, not pips, of course, because, well, this is 3 pips, but as I have to put 30 here, I just call it 30, you know, but it's ticks, as you can see here. Okay, so as you can see, the target obviously goes through that buy. And if we were to take the buy, which was on the 50%, was like this. I hate that the color just changes. Fucking hate it. Okay, so that's, well, we can go to 35, going for 175, right? So those are our 2 trades. What happened to me this day? The sell wasn't triggered right away. The buy didn't actually trigger me. My entry was a little bit higher. My buy didn't actually trigger me, so at that point I deleted the sell. I deleted the sell, and that basically made me miss out on this beautiful opportunity. Oh, sorry, it wasn't this one. Yeah, I thought it wasn't the higher one for some reason. But it was actually, my entry was actually on this area, right? Which would basically made me miss out on that opportunity because I deleted this this order. So, well, as you can see, as I was talking about earlier, I don't move my stop loss to break even at this point, even though I do see that the area was fairly respected, so price could easily start to push higher. But basically what happens now is that we get a mitigation to this order block that we have here, right, as a continuation pattern, and now it begins to fall and then it hits target right there, right? So basically what happened here is that I wanted to take both. The first didn't mitigate me, so I didn't think the risk was good enough because I wanted to be on both of them, and basically, as you can see, that made me miss out on a pretty good sell. So yeah, it is what it is. That's the way that I've traded these kind of patterns, and well, sometimes it has gone right for me as it has gone wrong, of course. So now we break the low, as we were basically discussing earlier. If we wanted to take a sell, when we have such move, sometimes I just say, okay, so I'm not really interested into taking anything. But when we broke this low, I took this as liquidity and considering taking the 50% of this whole range, right? So this order block was mitigated, but not to the 50%, and unless it's mitigated by the 50%, to the 50%, I don't consider that as mitigated. But price comes back later, and at that point my entry is already gone. So what do we see now? We got this, right? We do have price basically reacting to this small pause or range that basically is now making it move lower. We do have a flip from this point for me. Some of you may wait for something bigger. So let's say your flip will be here, right? Something like that. For me, it's not that necessary, so I don't do that. This is a break. Placed my entry here, but never mitigated me. And what do you do when you don't get mitigated? You continue to analyze. That's all that you can do. You continue to analyze. You have liquidity here, so your entry is still a valid point. At that point, maybe I would consider using this to the 50%. That depends, of course. I wouldn't trade something like that because it's a pretty large area. But yeah. So, yeah, this move, not really much to do with that. And as you can see, we are at this area where we had the liquidity, so price could easily react and start to push lower. If we got confirmations, we could actually take that sell, this sell that we have here. If we have confirmations as a flip or something like that, we could actually go for that. But at this point, when I see this reaction, I actually start thinking about buys. At this point, buys for me are actually more viable, and I see that we have liquidity here, we have liquidity here. All of this, I begin to see it as liquidity. There's no longer areas where price could react to continue to push lower, as we are reacting to a strong area on the 1 hour. So I'm basically waiting for price to just take over all of that liquidity and maybe then do somewhat of a pullback to then continue to go higher, right? As you can see here, we even created liquidity here. So we have liquidity on the way up too, right? This is all liquidity for price to come back to later when the market is basically being bullish. Bearish, which right now, price action, if I remember correctly, we are lower than that. Are we? I don't know. Let's not get lost. So basically have a lot of liquidity. Price takes out liquidity. We are kind of reacting to this, which if I do remember correctly, we do react to that. And look at what happens now. This is a little bit of a risky trade. If we check it out on the 15-second, it does have a little bit more of confluences, such as this liquidity that it basically takes, this move down takes. And we have that this move is a little bit clearer, so we can call that a flip, right? On the 1 minute, the only thing that I see is that we have a flip. That's all that I see. We could consider that this is liquidity, right? But at the same time, it's a little bit hard to find that on the 1 minute, right? But on the 15-second, that actually works out great. So what can you do when you have that? I wouldn't like to go with something like this because this is a pretty small area, so the chances that you actually don't get triggered are pretty high. So I would prefer to go with something like that and probably the entry on the 25 or the 50, depending, of course. So right here, this could have been my entry. This is 10-14, 10-15 basically. This one of the trades that I missed this day, sadly. I can't really say for sure why. Did I miss this trade? Oh, actually, well, I was actually trying to take this on the 50, wasn't I? I don't remember. But I do think, no, I was actually trying to take that on the 50. And as you can see, of course, I didn't get triggered. And well, in this case, it actually doesn't trigger. Okay, I thought we did get triggered on that one. That's a shame. But basically, that's another play that you can do. Of course, not everyone has the 15-second time frame. And it's not necessary, as I showed you, because the flip is basically you're able to see it from the 1 minute, but the liquidity, which is a pretty good confluence too, it's a little bit harder to be found. But we did take major liquidity here by mitigating that area. So now we have that major break. What can we see? We have a range here. Right, we have a range. At the same time, that range is liquidity below, has liquidity below, so that's not something that I want to take. If we check the 15-second time frame, we can even see that that's really clean liquidity, so that's something that I don't like. I would like that the range, let's say, did a small wick just like this, lower, to take all of that liquidity and then broke, so that would have been an amazing entry for me. I would have gone for that definitely, but basically that's not what happened, right? So we then continue to break, move higher. What happens now? We have a pause here, right? That pause was a pause before a major break. So at this point, you can either take that as a risk entry, which I don't really like doing, right? Or you could just wait for a confirmation entry, right? So you get price starts to reject that area. you have a flip, so now you can go for anything, right? We have a flip here. I'm sorry, not a flip. That's a break of substructure, right? Because this is the confirmed low, this is the confirmed high. So this is a swing low, this is a swing high, this is a swing low. This is not a lower low, this is not a lower low. If we broke this and we did that, that's a lower low. But this is substructure. These are structured. This is a structure within that major structure. So what do we see? We have a pause, we have extreme, so we could have gone for either of them. I do really like going for pauses, but I might would have gone for the extreme here, and I might would have gone for the 50% of that. As I know what happened here, I'm going to go with the pause. But there's a it's highly likely that I would have gone for that full range with somewhat of a 25 or 50% entry, as it is a pretty large area. But yeah, it is what it is. So at that point, you do have as I said, you do have the opportunity to take either the pause or the extreme. I kind of do like going for the causes to the breaks and major breaks, right? The cause, in my opinion, is a little bit stronger than the extreme, but sometimes the extreme works out greatly, such as the cases where it comes as an example here from mitigation, or that it took liquidity, or well, yeah, here as an example, look at all of this liquidity is basically towards that area, right? Even all of these highs that were left on that previous push lower, all of those highs are liquidity, because people see it as an area that price basically it started to push lower, it tried to go higher but failed. So someone says, okay, so let's place an entry here. Price will get back here. Will fail to do that. Will fail to basically break that high again, and then it will fall, right? That basically means that there's liquidity, and basically it means that there's all of this to be taken, right? And well, we had that liquidity too. But look at that liquidity. That liquidity took all of this, all of this, all of this. And I think, if I remember correctly, there was something just before it actually created more. So yeah, if I remember correctly, well, comes right away. That that break is already a break for me, that wick. So we could have been triggered right away, or we could hold for a couple of candles. And if I remember correctly, price does come back. Yeah, comes back and mitigates that, and well, that's a target. And even here, you have another break. The cost to that break is this area, and price just taps to that area and continues to go higher. So when I'm inside of a trade, I mostly analyze against me. So I just try to think about what is the seller trying to find here. A seller with my own strategy, right? Just to make sure that I'm not going against somewhat of a strong area or something like that. I just like to make sure that I'm not going against anything major than my structure. So yeah. If we wanted to continue the trade, to be honest, let's say I caught this one and this one, I wouldn't be really looking for more than 2 to take profits in a day. But let's continue to analyze. We have a flip here. Let me actually move this. This low is a flip. This move causes a flip when it breaks that low. Then we have a break of structure. Then we have this. If I remember correctly, I did take that. I wanted to go for the extreme, but I market executed this for a little bit. Works out for a little bit. I think it closed it somewhere around this area, right? And then price just goes higher, as it does have a little bit of liquidity. I didn't react to anything, because at this point I do remember saying, okay, so we have a range here. When it gets to that range, I think my target was somewhere around here. So we weren't that far. But basically, yeah, that's what I do. Let's say I'm inside of a trade, then I'm analyzing against me. I'm not looking for scaling opportunities. I'm not looking to take another trade within my trade, right? So let's say we actually took this. I'm not trying to get into this too, right? Same with this one. If I'm on this one, I'm not really trying to get onto that one, right? It's as simple as that. I don't really like. I mean, I do like scalings because in one move you could have like 3 to 4 cells, which means that 3 to 4 times that you would actually multiply the profit of only one trade, right? But at the same time, I don't know. I just don't like it, so I just don't use it. So that's what I do. When I'm in sort of a profitable trade, I just try to analyze against me. I try to think, okay, should I move my stop loss to break even? Should I just allow price to maybe come back and mitigate that confirmation entry? Should I just wait to do this? Should I just wait to do that? Etc. It's as simple as that. When I'm not inside of a trade, I'm trying to find opportunities. I just analyze everything, and I analyze that we flip. I analyze that we have a break, so that's an entry. We then create liquidity, so that's more confidence towards this area. We then continue to break. This looks like a pretty good zone. Took a little bit of liquidity. Took a couple of highs, so this is a pretty good area to go for. We have liquidity above us. I think it created more liquidity here. We do have some really clean lows there. Sadly, this one didn't mitigate us. Here you have to analyze everything because sure you have higher highs, high lows, higher highs, high lows. Can you be looking for buys here? Yes, but you have to make sure you're not going against the major power. I don't know if it's power, but I think you know what I mean. So always check where price is going to as where it came from, because if you wake up, let's say as an example, I woke up to this and I only have equal highs, equal lows. Sorry, higher highs, higher lows. So I'm going to look for buys, right? So this could be a buy for me. This liquidity is just an area to aim for. So even this pause here could have been an entry for me. And if I didn't keep in mind the sells, this is just a flip for me, right? When we have this flip, I could actually go for this entry. So let's say I didn't have in mind this area. Here we have a flip, and price actually comes back to mitigate that. And for me, that's not an entry because we only have one flip. But if we have in mind the fact that we have a major area that has major liquidity all over the place, then that changes your mind because you have to think, okay, so it's actually taking a lot of liquidity. We have patterns that we have seen on other academies, which is this type of pattern, and so on and so forth. You really have to keep in mind what's happening, what has happened, and what could happen. Now, of course, you'll never predict to 100% what will happen, what will each candle do. But yeah, it's just that, to be honest. I remember there was a buy somewhere around here. Oh, there, that pause. Yeah. Okay, so that was a little bit longer than I expected. Not gonna lie, they wanted to talk just a little bit while I was, I don't know, just also studying, because believe it or not, this actually helps a lot to me. These past few days, I've actually learned a lot by watching myself. But yeah, I mean, you gotta practice. You gotta get into the charts. You gotta watch the charts, watch what they do, and everything, and it gets to a point that maybe you'll do things out of habit. I sometimes do things out of habit, and I say, okay, that maybe won't work out. Or sometimes I have, as an example, have somewhat of a range that push, and the expectancy is to actually take that, and I said, no, that's probably not going to work, and price does that, and this is a pattern that I've actually talked about, where President later does that. Right, it's just sometimes I've taken patterns like this, right, when you take that sell and that works, and other times I've not taken that pattern because I think that price will actually go higher than that, and that's exactly what has happened. And it's just, to be honest, it gets to a point where you just space yourself out of history. You start thinking, okay, so what happened that time? Or I do remember this time that we had a similar structure, and yeah, I mean, that's pretty much it. I hope you enjoyed. I hope you understood everything that I talked about. I hope my volume was high enough, or high enough. It's just that sometimes I'm talking with friends. I actually lower my volume, so that's why the volume is not always static per se. So that's basically all. Make sure to share the video, and we'll be seeing you on to the next one.